We are covering these 6 top big cap stocks with large percentage moves today. While watching bullish price actions, let us inform you our review on XHLD TN Holdings, a company known for its expertise in event planning and production, has just made a significant move that's turning heads in the market. For those who aren't familiar, TN specializes in creating virtual, hybrid, and physical events, offering services like live streaming, video recording, and interactive broadcasting through its Cyvid Pro platform. The company has built a solid reputation for offering a range of event types, from on-site studio broadcasts to fully virtual, webcam-based events, and even pre-recorded content played back at scheduled times. Now, TN is pushing the envelope even further by launching a conversational AI offering. And it seems like investors are really liking what they're hearing, as shares have jumped in response to the announcement. This move is a logical next step for TN as the event industry continues to evolve and embrace more digital and interactive solutions. With the integration of AI, TN could significantly enhance the attendee experience, offering real-time, AI-driven interactions that feel personal and engaging. Imagine being at a virtual event and having your questions answered immediately by an AI, or getting personalized recommendations based on your preferences and behavior. This kind of experience could really elevate the value of what TN offers. The market's reaction so far has been positive, with the stock price rising following the news. That tells us investors are hopeful about this AI-driven approach, seeing it as a way for TN to differentiate itself from other event production companies. By combining cutting-edge AI with its already established platform, TN could create more engaging events, streamline event management, and ultimately unlock new revenue opportunities. For those keeping an eye on TN, the key will be how effectively the company integrates AI into its existing services. If they can deliver on the potential of this technology and offer a seamless experience for both event organizers and attendees, it could position TN Holdings as a leader in the future of digital events. The potential upside here is big, as more and more companies are turning to virtual and hybrid events, and those that can create a more interactive AI-powered experience are likely to have the upper hand. So, it'll be interesting to see how TN capitalizes on this new direction and whether it can continue to innovate in a rapidly changing market. Our review on LXEO Therapeutics, a clinical stage company focused on advancing genetic medicine for cardiovascular diseases and Alzheimer's, recently shared its Q4 financial results, and it seems like investors are responding well to the update. The company reported a quarterly loss of 78 cents per share, which was an improvement compared to the loss of 86 cents per share this time last year. The results beat analysts' expectations by a small margin, which is a good sign in the world of biotech, where volatility is a given. But it's not just the numbers that are grabbing attention here. Lexeo also provided some important regulatory updates that could be game changers for their lead programs. The company highlighted the continued progress of their cardiovascular program, particularly for LX2006, a treatment for Friedreich's ataxia cardiomyopathy. The FDA has been supportive, and Lexeo is optimistic about the potential for accelerated approval, which could speed up access to this much-needed treatment for patients with this rare and serious condition. Additionally, Lexeo shared positive early data for LX2020, a candidate for arrhythmogenic cardiomyopathy, a heart disease caused by genetic mutations. The safety profile looks favorable so far, and they've now fully enrolled the second cohort in the phase 1 of 2 heroic PKP2 trial. The next big milestone here will be more clinical updates later in 2025. Financially, Lexeo seems to be in a solid position to continue advancing its pipeline. They've got $128.5 million in cash, which they expect to support operations through 2027. That's a good runway, especially for a company in the clinical stage, where funding is critical for keeping trials moving forward. Overall, the market seems to be responding positively to the company's progress, especially with the regulatory clarity around LX 2006 and the promising early data for LX 2020. If Lexeo can continue to show progress in its clinical trials, it could set the stage for significant breakthroughs in both cardiovascular diseases and Alzheimer's, two areas where treatments are desperately needed. The stock price may continue to benefit from these updates, especially if they can keep hitting milestones and get closer to commercialization. Our review on GDHG. Golden Heaven Group Holdings Ltd. is a holding company that focuses on managing amusement parks, water parks, and various recreational facilities. They offer a wide range of entertainment packages, from rides and attractions to food festivals and circus performances. On top of that, the company collects rental payments from commercial tenants, including convenience stores and operators running specific amusement facilities. Most of their operations are centered in the domestic market. Recently, Golden Heaven has been making strategic moves to strengthen its position in the entertainment space. By diversifying their offerings with events like food festivals and circus performances, they're hoping to increase foot traffic and create year-round engagement. This approach helps counter the seasonal fluctuations common in the amusement park industry, where attendance can vary. Additionally, securing long-term rental agreements with commercial tenants provides a steady revenue stream, which is always a positive in this business model. While the company still faces challenges inherent in the leisure and hospitality sector, like changing consumer preferences and economic factors, its efforts to expand beyond just traditional park attractions could help boost growth. Investors should keep an eye on how well Golden Heaven balances its core business with these new initiatives. If they manage to keep customers engaged and attract fresh interest, the company could continue to perform well. Our review on LOT. Lotus Technology Inc. is a company that designs, develops, manufactures, and sells luxury electric vehicles, focusing on blending electrification, digitalization, and cutting-edge automotive technology. Known for its iconic British brand, Lotus specializes in non-sports luxury cars designed for everyday use, and it operates in key markets like China, the UK, and the EU. Recently, the company has seen its stock rally sharply after hitting an all-time low, which might be due to a combination of investor sentiment shifting and the company's strategic positioning in the fast-growing electric vehicle EV space. That said, the luxury EV market still faces some significant headwinds. One of the biggest challenges for companies like Lotus comes from global trade tensions, especially with tariffs like those imposed under the Trump administration. These tariffs have placed additional pressure on luxury car makers who rely on international markets, particularly in regions like China. Despite these challenges, Lotus is tapping into the growing demand for electric vehicles by focusing on the luxury market, which remains strong. Their emphasis on technology and sustainability could help them carve out a niche, even as global trade dynamics pose risks. For investors, the recent stock rally may indicate that Lotus is gaining traction, but they should keep an eye on how external factors like tariffs could impact profitability. As with any luxury brand, the market's demand for high-end, tech-forward vehicles will be key to Lotus's ability to maintain its growth. Our review on DOMH. Dominari Holdings Inc. is a holding company that's got its hands in a lot of different financial services. It operates through subsidiaries like Dominari Financial and Dominari Securities, offering everything from wealth management and investment banking to asset management and insurance products. They're targeting high-net-worth individuals, corporate executives, and both private and public businesses with a broad range of services, including brokerage, wealth planning, margin lending, and strategic advisory. Recently, Dominari has been gaining some traction in the financial world. Their wealth management and investment banking segments are continuing to show growth, and the comprehensive suite of services they provide gives them a solid foundation to build on. For investors, the big thing to watch is how well Dominari can capitalize on the shifting market conditions. With the economy fluctuating, particularly around interest rates, the demand for wealth management and investment banking services might go up or down. But that's also why their broad service offering helps. If one area feels pressure, the others can pick up the slack. For example, if the stock market is turbulent, people might be more interested in wealth management advice to secure their assets. And on the flip side, if companies are looking to navigate tough times, Dominari's investment banking services could see more activity. It's about that balance. So, while there's always some market risk, the diversity in their offerings makes them an interesting one to keep an eye on. In the long run, it'll be important to see how they manage to grow those wealth and asset management arms, because that's really where the growth potential lies for them. Our review on TNXP. Tonix Pharmaceuticals Holding Corporation is a biopharmaceutical company that's been making strides in the CNS and fibromyalgia space. They've been focused on developing new treatments for serious diseases, and one of their most talked about candidates right now is TNX-102SL, a drug designed for the management of fibromyalgia. If approved, it could be a game changer for the millions of people affected by this chronic pain disorder, as it would be the first new treatment option in 15 years. The big news this week is that the FDA has decided not to require an advisory committee meeting for TNX-102SL's new drug application, which means the approval process could move faster. This is a significant win for Tonix, especially since the FDA had already granted the drug Fast Track designation back in 2024 to expedite its review. CEO Seth Lederman is feeling optimistic about TNX-102SL's potential not only to offer a new treatment for fibromyalgia, but also to introduce a whole new class of therapies for the condition. Tonix has been pushing hard to get TNX-102SL to market, and with over 10 million adults in the U.S. affected by fibromyalgia, there's a massive unmet need that this drug could address. The stock reacted positively to this news, with shares jumping around 25% to $28.85. If everything goes as planned, we could see a launch of TNX-102SL in Q4 2025, pending FDA approval. For investors, this is a significant moment to keep an eye on. If TNX-102SL hits the market, it could really elevate Tonix's position in the biopharma space, especially given the lack of competition in this area for the past 15 years. With the FDA's decision speeding things up, Tonix is looking stronger than ever. Investors are clearly responding to this positive development, so it'll be interesting to see how the stock performs as the company moves closer to potentially launching its breakthrough treatment. Please subscribe, give the video a like, and watch more from our playlist. Thanks!